In this video, I want to showcase one of my favorite trading patterns that I like to use on a daily basis. So, in this video, I want to show you everything that you need to get started with it. So, the first thing that you're going to understand in this video is the understanding price behavior, time frame adjustment, higher time frame analysis, lower time frame analysis with confirmation, and also we are going to use some examples. This trading strategy will teach you to make, most of the time, it will be sniper entries, only if you take the retracement entries, but I'll show you some different types of sniper entries. So the only thing that you need to understand is this behavior in the market. Most of the time, you will see that you will have a smaller candlestick and then a sharp move to the downside. Then, in this area here, in the lower time frame, this is where we'll be looking to go short. Around this area, this will be your invalidation level, where we don't want to see price moving above this previous high here. But if, let's say, right now you are looking to enter the market in the lower time frame, let's say this is the 4 hours, and then another 4 hours that will be forming around this area. So if, let's say, right now you see that price is breaking above here, the previous high here, and then returning, this is where you should be looking to enter short during that 4 hours candlestick that will be forming in that certain time frame. So the same thing will apply in a bullish scenario. Sometimes even this candlestick might not even be this big. Sometimes you will have a smaller candlestick here. This one will be small, and then you have this one here, which is a little bit smaller. Okay, and then you will have this kind of candlestick in the market like this. You will have another candlestick. Let's say this one will be aggressive in this kind of situation. So that means you will be looking for the market to come down to this area here, this being your invalidation. And then you will be looking to go along around this area using price action to confirm that entries. So right now, let's move on to something that will be very clear to understand in this kind of situations. You will see that in the higher time frame here, you will see that price will be very aggressive. You will see this kind of sharp move to the downside. This move here will be very corrective. But before we can reach this area here, you will see strong moves to the upside. A very sharp candlestick to the upside. You won't even see smaller candlesticks like this one here. You will see a huge candlesticks coming to this area here. So in that kind of situation, this is where you'll be looking to go short. And price action will always tell you where the market is likely to break to the upside or price is likely to change the direction that we will be anticipating. So in the lower time frame, this is what we are looking for. We are looking for some sort of a rejection candlestick like this here, where price is showing a sign of rejection in this level here. Even if price is doing something like this without even touching here, that means we have to avoid that setup because we are looking for only sniper entries in this kind of situations. And another thing, if you want to put some confluence into your trade, you can add break of market structure. Let's say you have this line here. This will be your higher time frame area. You will wait for price to come to this area to break the market structure, and then you'll be looking to go long around this area or even return back here. It will look something like this. You will have your higher time frame zone. When price come to this zone here, you will wait for price to break at least a previous high, correct around this area, and then you'll be looking to go long here. That's how at least you can try to understand it. And sometimes you'll see that price will have some, after breaking the structure here, let's say we have something like this. No, we have something like this. Okay. Price breaking this previous high here. And then sometimes you'll see that you will have some internal highs here. This should be your target. For at least, let's say right now price is around this area. You will wait for price to break this internal low here, so that price can reach this area before price can move to the upside. That's how at least you can try to understand it. Let me show you some time frames that you need to follow to at least understand this properly. You will have the analysis on the weekly, which you will take trades on the 4 hours. On the daily, you will use the 1 hour, the 30 minutes. Obviously, this 1 hour, if it's not clear, you will check on the 30 minutes. And then you have the 4 hours as your higher time frame analysis. And then you will use the 15 minutes and the 5 minutes to confirm that entry. So even if you are using the 1 hour time frame, you will have the same scenario on the 5 minutes and the 3 minutes as your confirmation entry. That's how at least you can try to understand it. So right now, if we look closely here, this is the higher time frame analysis. It will look something like this. You have to see this candlestick and then a sharp move to the upside here. You don't have to see any bearish candlestick when the market is moving to the upside. So like for instance, we have to see something like this. We have a bearish candlestick followed by bullish candlesticks like this. But if let's say right now we have a bearish candlestick in between here, that means this will be very difficult to understand. But let me show you something. If we have something like this, you will do another candlestick. Let's say it's like this, is pushing to the upside. This will be your level that needs to be taken before price can move to this area. You'll wait for the market to break here, and then you'll look for lower time frame entries here so the price can move to the upside. So if you look closely here, we draw the zone below the candlesticks here. And then in the lower time frame around this area, this is where you'll be looking to go long. This is on the 1 hour time frame on Euro AUD, and price was moving to the upside. So even if you try to draw your break of market structure, you can see it here. So in the lower time frame, you can clearly see that price was retracing with this candlestick. Let's look at the lower time frame. You'll see this very clearly. This is the lower time frame. We want to go long around this area. So that means right now we're waiting for price to at least break some structure here or break this high here, and then return maybe to our order block, or maybe to your demand zone. This is how at least you can try to understand this. And another thing, if we highlight this area here, if you look closely around this area, you can clearly see that price made a sharp move to the upside. Price came and returned to this area here. This is where you'll be looking to go long. And obviously price likes to do this kind of moves a lot. Even on this area here, price returned with this candlestick. That is why you see a sharp move to the downside. Even on this area here, you can see a move to the downside. Okay, I hope this is very clear to understand. But you just draw the zone below the candlestick, and most of the time you will see that before any aggressive move to the upside, you will see another aggressive move to the downside here. Okay, So let's look at this area here. We can clearly see that price tapped this area, made this high. It made this high here, and then it returned back here. So then you can wait for another high to be broken, and then you can confirm here. You can clearly see that we have this rejection here, which you can take this trade to the upside. Okay, and even in this area here, you can clearly see that we have this area, and then you move to the upside. This is a rejection. Okay, let's look at another example here. And as I said before, if price move to the upside aggressively and then it leaves a certain bearish candlestick here, this will be your target. You have to target this areas here before price can touch this level here. And then on this area, this is where you'll be looking to go long. This is the gold on the daily time frame, and I have posted this analysis on Telegram and even on Discord. You can check the link in the description below. And also another thing that I wanted to point out is that Telegram is just a bad place. I don't like Telegram at all. Please come to Discord, because I keep getting banned on Telegram a lot. So if you have any question, you can also contact me on Discord most of the time. Okay, so let's look at the lower time frame. You'll clearly see how the market behaved around this area here. You can clearly see that this analysis is just great. We are looking to go long around this area here. So we can wait for price to break and then return here and then confirm for price to move to the upside. So right now, let's look how the market behaved in this kind of situation. And also you can see that we have a bullish engulfing candlestick here. Right now, we can still enter the market here and then wait for the market to move to the upside. And in this situation, you can clearly see a break of market structure here. This one is not clear to see, but if we use candlesticks, we can clearly understand and see a break of market structure. Even if you move on to the lower time frame beside the 1 hour, move on to the 30 minutes, you will see price action being very clear here. That is why you see price moving to the upside very aggressively here. So that thing that I was talking about, let's say right now you are looking to go short here. Okay, it's something like this. You have this 1 hour candlestick here that is breaking above here. This 1 hour candlestick here, this is your signal to move on to the lower time frame, even if it's breaking this high here. I'll also show you on TradingView with some real examples so that at least you can try to understand this very clearly. This is the example that I was talking about. You can clearly see that on this candlestick, price is breaking this area here. So that means right now we are looking for the market to push to the upside. Because this candlestick here did not close, that means we are still in our trading time frame. Okay, I hope you understand it. So in the lower time frame, you'll see that price is very clear. You will see this aggressive move to the downside while price is breaking at that area that we are looking to go long. So in this situation, you can wait for a rejection here and then wait for market to push to the upside. And clearly you can see that right now we are trying to return to the upside. But if you want more confluence in the market, you can wait for a break of market structure before going long. But in this kind of situation, you can clearly see that we don't have a clear break of market structure here. And then you will wait for the market to come down. And here you can see a rejection for the market to push to the upside. Even if you missed this one here, there's a clear demand zone around this area, so that you can confirm with a bullish candlestick. Okay. Even on this area here, you can clearly see that price touched this area here, made this candlestick for price to move to the upside. Let's look at another example here. This is the EURUSD on the daily time frame. So in this area, we are looking for price to come to this area, make a break of market structure, so that we can push the market to the upside. Let's look at the lower time frame. You can clearly see that here we don't even have a break of market structure right now. So we will wait for something like this before price can move to the upside. And we can clearly see a gap here that we want price to fill. And in this situation, you can clearly see a break of market structure here, here, or here. You can confirm here for price to move to the upside. So another thing that I wanted to point out is that sometimes price can take a lot of time before it can touch that area that we anticipate price to come to. Like for this example here, we can clearly see that we had a lot of correction here before we can anticipate this move here. This will be our analysis. This will be our target because we have this area too. So when we move on to the lower time frame, this is the Euro JPY on the 1 hour time frame. If we move on to the lower time frame, the 3 minutes, here we can clearly see that when price was just playing around in this area, we were looking for sells around this area here. And then here, this is where you will wait for a rejection. You can clearly see a rejection here. And then you will wait for price to move to the downside. And as I said before, price will be very aggressive when prices tend to reach these areas here. And then you wait for the market to push to the downside. That's how easy it is to understand. And sometimes here, guys, there will be no break of market structure on this area. Sometimes there will be no break of market structure on that area. Even if you wait for it, there won't be any break of market structure. You'll find a break of market structure very late, and we don't want that into our trading style. Okay, so right now let's do a few examples on TradingView so that at least you can try to see what I mean in this situation. So let's say right now we are looking to enter the market around this area here. This will be our setup in the higher time frame. We are on the daily time frame right now. So when we move on to the lower time frame, we can see that here, this is Thursday on the 27th of February. So our trading area will be on this candlestick here. When price touches this area here, this is where we should be looking to go long on that day. Even if price trades a little bit below this area, but because this candlestick alone is the one that touched this zone here that we are looking to enter long, this is a confirmation candlestick that we need to look for a confirmations in the lower time frame. So right now, let's move on to the, let's say we move on to the 1 hour time frame in this situation. We will wait for the market to come to this area here and then look for a long position. Okay, then we have to wait. Okay, this is the first candlestick that touched the area here. We are looking to enter long. Okay, price even traded below this area here. So that means right now we can wait for a break of market structure, and then we will look for a long. Here we can clearly see that price is trying to break this previous high. Okay, already it did. Then we will wait for the market to return back and give us a confirmation. But in this situation, it did not return back. Price just shoot to the upside. So even if, let's say right now you see that, okay, in this area, price give us a bullish engulfing candlestick, or even here, a bullish engulfing candlestick, you can enter long here, but price will eventually stop you out with this move here. But after stopping you out, it gives you another entry here. This is where your risk management should be in place to trade in this kind of situations. And then you can clearly see price moving to the upside. So let's look at another example that will be very, very clear. Even if, let's say right now, let's look at the 30 minutes here. Even on the 30 minutes time frame, this is the first candlestick that touched the area. This is a rejection. You can enter here. Let me zoom in a little bit. You can enter with this candlestick here and then wait for the market to move to the upside. But if you get stopped out, you can enter again with this candlestick here that traded a little bit below our area. And then you enter here and then you put your stop loss below. It will be something like this. And then you target the previous high. This is where you should at least try to hold your trade for a longer period of time, especially when price traded below the previous area that we have anticipated that the market is likely to reverse on that area. Okay. We have this analysis here. This is the 4 hours on gold. Right now, we have this area. And then this will be our initial target. Our analysis will look something like this. For price to come to this area and then shoot to the upside. So in the lower time frame, the 15 minutes, let's use the 15 minutes. We will wait for price to come to this area, give us a rejection or maybe a break of market structure, and then we will look to enter the market long. So let's see how the market will play out in this kind of situation. And we can clearly see that price touched this area. But this is not a clear indication that price is likely to move to the upside. So let's say right now you see that you have this candlestick here. You can still move on to the lower time frame. And here you can have a clear view. We have an engulfing candlestick here. You can try to enter around this area. Long here. Stop loss below. And then you target around this area. Then you will wait for the market to move to the upside. And also, if let's say right now you want to see a clear indication that the market is trying to move to the upside, you can still try to use some sort of retracement like how we did here on the engulfing candlestick, or use different types of time frames. And obviously after price is broken, let's say a few higher highs, you can still put your trade on break even and have a risk-free trade like this. And then your target is around this previous high here. You have this previous high. This is your initial target over. Let's try to look for another example. Here, this is Bitcoin here, okay? I want to show you two examples here before we end this video. Let me cut this area. Let me cut this area here. you can clearly see that on this one here, price traded below this area here. But here, it didn't break above the previous high of this area here. So I want to talk about this one here. You can clearly see that this is the 4 hours time frame. On this 4 hours time frame here, this is the only candlestick that traded below the zone. If you don't get an entry during this 4 hours, the next candlestick you should always avoid, because price can continue to the downside. This is the only candlestick that should give you an entry. So if we move on to the lower time frame and look at price around this area here, we might even find an entry below this area, because this is the only candlestick. I hope you understand me when I say the only candlestick. Let's move on to the 15 minutes. You'll see clearly how the market did. You can clearly see that there is no valid price action to enter the market. Move on to the 15 minute, 5 minutes. You can clearly see that price was very, very aggressive to the downside until we have this rejection here. This is where you should enter the market long, and then you put your stop loss below. You can target the fair value gap around this area. And when you move on to the lower time frame, look, when you move on to the higher time frame, again, this will be your entry. And also, you can see the sell here. Also a bearish engulfing candlestick, and then you entered on the retracement, the short here. This is the same thing that you should at least try to do. And then you enter the short, you can target the previous low. Like this. When you move on again to the higher time frame, you clearly see that your entries are all sniper entries. You can clearly see that you entered here. Even on this one, your entry will be around this area. I hope everything was a little bit clear on this video, but if you want more examples, come to Discord and ask me some questions, because right now I don't know what's wrong with Telegram. So I guess I'll see you on the next one.